Hello traders, Vladimir here, and this is the weekly forecast for the last week of August 2016 and the beginning of September. So the question is summertime is over and we can really think about it positive due to the last last Friday moves actually after Jackson Hole. The Federal Reserve actually for the very first time hint that the chances to increase the rate are very big right now, and all the data they wanted to see is on the table, and the market reacted accordingly. We saw brutal moves and the dollar gaining strength accordingly, and it was really impressive to see how the market was expecting something like that from the Fed. Now the question is that for real or not? Because if the Fed will not raise the rates on September and again take a passive side, that could really blow up the dollar on the next moves. So let's go over the charts and see what are the opportunities we can deal with this week, and maybe thanks to the Fed. Now there is one more important thing to mention. With all the data the Federal Reserve was referring to, number one data is what's about to come this Friday, and we are talking about non-farm payrolls. A bad non-farm payrolls or unemployment rate, and all the rumors and the speculations about the dollar strength could just vanish. So you have to remember that. You have to be very careful because of that, as with all the dollar strength that happened after last Friday, things could easily turn around if the non-farm payrolls actually turn to be surprisingly negative or bad according to expectation. So all that to come on Friday, but before that, let's go back to the charts, and I'm very excited to go back to the charts fully after the family vacation I had last week. It was really great, energy falling, and really feel excited after we are coming to autumn period and summertime is about to end, and things are about to get very interesting, very likely on the market. A lot of things about to happen, while maybe the main event would be on November with the US elections. Things are about to get interesting in autumn period, so get ready guys, tighten your belts, and I'm used to hear that after the vacation. And tighten your belts guys, and let's go over the chart. So the number one things would be of course the pairs of the dollar. So let's start with the euro dollar, which surprisingly lost its value and surprisingly very strong. So here what we got. Now here is the thing with the euro dollar. If you remember back to this area, we got kind of triple movement here, we got a double move here, and from here we have two ways. One, we go all the way to here for a double move like this, or two, we go for something like 1-2, maybe 1-2 more before deciding what's coming from there, down or up. As it looks right now, the second variation looks very possible, especially if we take into consideration the breakout of this trend line and the fact that we had bearish hidden divergence right here. So all that come and lead us for also this divergence, continuing divergence, which actually puts the bears back in. Now about the euro dollar, we should remember that we are still in a ranging movement according to the weekly chart. So I would make it very simple. We can see that the euro dollar broke this trend line, right? And right now it's retesting this trend line. So what could happen from here is actually attempt to break out, to break down and get inside, rallies and a sell. Let's make it short. Why to complicate things, right? As long as we are below the last high and the bearish hidden divergence holds, there is a pretty serious chance we can get one more move down. Now, there is a not bad chance at all that we will play inside this range right now as well. Okay, until September actually. So it could do something like that as well. As for us, we want to go short, and we would want to do that as long as the last high holds. We have this trend line, and we can simply say if we can get pullback anywhere in between 212.20 up to 212.90, or even to 113, sorry, not 212, 112.20 up to 113 approximately, we can go and deal with sells again. We have this trend line been broken. If we can go and retest it, we can look for sells right from there, and that should be pretty nice opportunity. Now if you take a look on the current movement, that's what we got, right? So we could expect something like that to happen anyway. We would be looking for 111, 110 as first target zone. This would be right here on the 200 moving average down to the support slightly below, and the next one could be all the way to this bottom. But first of all, I will probably see and face some war between the bulls and bears there, so we would like to get retraces, sells. We should get something like that. Continuation. By this we minimize the risk, potentially improve the reward, and that's the most important thing for us in that case. That's all we want to see and to do. That's per the euro dollar. Now let's take a look on the pound dollar. So here, pound dollar. The pair also seems creating kind of a range, which could be turned to be a triangle. So far the moves are pretty beautiful, and we could expect the pair to try and get one more bottom. Now the pair has this trend line, and we can summarize and see. We draw down to 4-hour chart, and we can summarize and see, say very easily here, right? It looks very powerful. As long as it holds, we are after sells. Now taking a look, let's get a bit deeper here. We also have two waves here. We could get now two waves down, or even lower, right back to the daily triangle. We had a bearish divergence everywhere. The trend line was broken here, the trend line was broken here. Looks good. We can nothing say beside that. So retrace up to 131.60, up to 132, 132.20 even, and we are after sells. Okay, that's basically what it is about here. Something like that, then breakout and try to sell. We would want to get the minimum risk versus the maximum possible profit, and our maximum possible profit would be this trend line. But first of all, we'll have to respect the 130 area and see how it reacts there, if it reacts there. Okay, so keep an eye on the pound dollar, which also look great, and the crossing between the euro and the pound, the euro pound, seems like they're getting ready for possible second leg down. Now we had a beautiful movement here actually. I would want to see this. If we can get it, breakout could be leading for another move down. If we don't get it, then we just move for kind of, let's zoom in a bit so we can see that better, like this. Okay, then we can talk about possible movements of triple cycle, 1, 2, something like that, then pull back and maybe one more leg down after that. Okay, so two scenarios for us. Scenario number 1, rally, back to this area. Okay, from here looking for possible sells, ideally with the break of the trend line to be created, because this way we minimize the risk and maximize the profits. We could aim the gap once again around 0.83 and still the gap from the daily chart of 0.8140. Okay, the break of the trend line basically proves momentum and improves the risk reward. So that could be very, very interesting situation. Scenario number 2, we go for one more low, completes to complete this, create a bullish divergence, then pull back, and then sell once again. That's the two ways we are going to look on this pair and try to trade it. Now let's go over the next interesting thing. That's going to be the yen pairs and what is happening with the dollar yen. Now, if we take a look here, it looks like the pair found a double bottom. Here we can also see that very beautifully. We have a beautiful divergence. We have all the fundamental reasons for that. Fed said all the reasons to hike the rates are there. The central bank from Japan said they will reconsider to go even for more negative rates than they already have, and that leads for the bullish wake up for the pair. We have a trend line right here which was broken, retested, and holding. We have a triangle here which was broken, holding, and retesting. So basically, as long as we are above this bottom pullbacks, we are after buys. How far can we go? We've had here some kind of a special cycle, and we can easily aim to the 50% of it. So our first thing would be around 103.50. That's where we will be aiming first of all. After that, to the top of the possible channel we have to deal with, which is around 105, 106. And after that, skies could be the new limit for this pair, because there was a special cycle on this place as well. Let me just show you what do I mean, guys. Just a second. Here, 1, 2, 3. So we could easily even start dreaming about this area. That's doable. That's possible. It's a bit earliest for now. So we would like to see pullbacks here and longs again. Next one on the list, well, we can talk about all the yen pairs, okay, but the idea would remain exactly the same. Euro yen and pound yen, they basically create some kind of range here, so there is a trend line, and as long as it's respected, we could go and expect it to move like this. Pound yen could do exactly the same. Okay, like this. So as long as the trend line holds, and we can see there is clear trend line, right? As long as it holds, we can drop down to lower time frames and say easily, this is what we get, right? Pullbacks and buys. How far? Well, let's assume we have the next resistance right here around 135, 136. That's where we will aim first of all. Then to the top again, which is approximately around 141 or so. So that's the direction. Next one would be Australian yen, which from my point of view is one of the tops, and here is basically why. The Australian dollar had this cycle, this special cycle on the weekly. It has a bullish divergence, so it looks very good for another rally. Now here is what's happening here. We have this trend line on a daily chart. I prefer we got it broken. Currently it's holding, which is surprisingly, this is just an empty spike so far, as you can see on daily. We are there yet holding. I want to go above this area because that would confirm bulls are very likely here. Okay, and that's what I want to see first of all. If we can get above the trend line and hold, mark this trend line, come closer and look for your buys. The reason I love this pair is because the risk reward there could be monster. We would want to see it holds the last low, okay, and the target could be all the way according to the weekly chart, special cycle, which means, in other words, if we put a Fibonacci retrace on this, we are aiming anything in between 84 to 88. This is a monster risk reward for us. Okay. All right, let's continue. The next one would be next one would be dollar CAD, which is surprisingly holding new area. This is the new area. Okay, and we are talking about 127.50 actually. Now why it's surprising? Because this trend line was broken and right now getting retesting. Same of this trend line. So 131.31 is the real test zone. If we rally above it, if the pair rallies above it, we can start talking about serious longs. So if we go here, this area holds, then we mark this trend line and something. Okay, let's mark it here. Let's put lines. If it goes holds, right, the breakout of this, then pulling back to this area, and we are after longs. There is still chance that the pair is just moving yet in this channel, and this is currently a channel. So we could be aiming the 132, 133 area, and maybe this is the beginning of the double wave correction. Double, back to 135, 136 before we can do this. So that's how I want to go long, and as long as last bottom will hold, from my point of view, look only for longs. Now guys, here is the most important thing. As I said at the beginning of this video, we have non-farm payrolls to come this week. Non-farm payrolls could change the entire plan which we are talking about. So far we covered so many dollar pairs. You have to remember, we don't want to overexpose to any currency, especially to the dollar. Okay, so play safe. Choose those that give you the best risk reward and go with them. And one of these that actually gives this best risk reward is the New Zealandian dollar, which I must admit I love. Now, according to the Central Bank of New Zealand, they still expect 0.75, 0.76, which theoretically could easily happen if the Federal Reserve would actually don't take any action. Then we will see that going there. But before that, and until the Fed will decide what's to come, this trend line was broken. You can see that right here. We have a divergence, we have a false break, and we have a monster kicker. I love these patterns, and that's why this high has to hold for a sell. So we can also see we gain, as you can see right here, we gain a bearish convergence, which means we want to pull back to anywhere in between 0.70 to 70, I would say, up to 0.73, 10, 20. We go sell, or maybe even we can make it 0.70 to 60. Okay, so this is the zone. This is the sell zone versus this top, and aim to go short here. Where can we aim of this short? Well, the final target due to this triple cycle on a daily chart would be here, 0.6750. But first of all, we have this double cycle. We can see this 38.2 is about to get reached, right? Which actually makes this double cycle shorter irrelevant, which means we can go and start to trade the longer cycle, or we can start to look for one of the two things to happen, 1, 2, okay, or play in this new range to be developed, something like that. That's what we will want to do. Short is our direction, bottom line. Get your pullbacks versus this top go only for sells. The deeper the pullback, the better for us. It will improve the risk reward. We will want to try this. Okay, this is the place. Sell the breakout of the trend line, and this is where we will want to go sell. Why? Because that's what gives us the best risk reward. That's where we gain our best risk reward opportunity, and this is exactly where we will want to trade. Aussie dollar could go and be the next follower here. Again, everything looks good here. Everything looks healthy here. Looks good for short. Now we had here kind of a triple cycle. We can call it double cycle. Doesn't really matter because we still aim to this place in the middle of this area right here. That's 0.7450 approximately. That's where we wanted to go. So again, look for shorts, but it starts to be too much dollars, right? So as I said, guys, we can go over all of them and just summarize and say, get your best risk reward. Wherever you get it, that's your best opportunity. The crossing between the last two pairs we saw would be the Aussie Kiwi, which for long run I still remain ultra bullish. But on short run we could maybe get it playing around 103, maybe even 102 before it starts its crazy rally for the next round. That's all good, it's all correct, it's all doable, and from my point of view, it's only try longs. Right now we have this trend line broken, so as long as this bottom holds, the pressure remains bullish. That's all. Look for longs, that's where you will get your monster risk reward. And if we get it lower, perfect. We getting even better risk reward. So even if things don't turn to work right away, we're still after longs only because of the risk reward to come on next steps. That's where we will want to see our monsters opportunity, and this is one of them. So keep an eye on this pair. The next pairs I have on the list actually going to be the cross. Euro Kiwi, I want to go long as well. Now this pair, this what it is doing right now, and it's pretty it's playing it pretty crazy. If the New Zealand dollar to drop lower, this is the breakout we wanted to see, and we got it on a 4-hour chart. We also got a kind of a bullish convergence creating right here between these two tops. So this is the drop we will want to see. As long as this bottom holds, drops can lead us for longs and longs only, and I would start looking for anything like this. Okay, so long is direction. Also, as long as the New Zealand dollar holds its top from the daily chart, remember that it's coming together. CAD franc is another good opportunity. We can see CAD franc. This is another great opportunity. We can see the pair is doing for us. Well, it's holding this trend line, right? It's breaking this trend line. It looks good, it looks healthy, and according to higher time frames, we are after buys only. This is the triple cycle I referred to. We are only after buys. So how can we go and try jump in? If you are not in yet, this is what we are doing here. We got double, right? We get double now. If we can get double here, and as long as the trend line holds, this could be our buy zone again, aiming for new highs. I would make it simple. As long as 0.7420 holds, long. That's all. Look for longs. How far can we go? Well, first of all, these two waves duplication, that means 0.76 plus. Then, according to higher time frame, we could expect this to duplicate, and that would mean 0.84. So long it is. That's the direction we want to deal with right now. Another pair is Aussie versus the CAD, and after making it into something interesting, I would say, after making it into 61.8 of one cycle here, it could start looking to make this kind of movement. So we could go to here, which is 076, 077, 076, 80 zone, and maybe even a bit lower. Okay, so basically we have two ways to join. Way number one, if we can get this, then on this trend line to develop, look for shorts for this second leg. And way number two could be if we can get, this is a false break here, right? This is a false break here. So if we can get this, then try to sell the top of the channel once again, aiming the 61.8 expansion as mentioned. Should be not bad sell opportunity. Okay, let's continue to the next interesting things on the list. Euro franc, we have been talking about it several weeks ago that we will want to see the second leg developing, and it is developing right now, and this is what we get actually. Okay, so there is still room to go for us. It's above 110, maybe even 111, so let's make it very simple. This trend line was broken, right? We draw down to 4-hour chart. This is the trend line I referred to, of course. And this is the new trend line we have, right? So if we can get closer to here, this could be very nice long opportunity with pretty small risk and very good reward. Next one on the list is going to be the silver and the gold, and we can take a look what silver does with the breakout we have had. As we've been talking long time ago, we are probably aiming to here, and we are still aiming there. So in other words, right now, every pullback we got to 19 and higher, look to sell. We have this trend line, get closer to there, look for your sell opportunities, and aim the daily trend line, which is creating right here. Now that's pretty serious opportunity. Okay, could be really interesting. Gold, gold has two ways it's going to behave right now. One, this is going to hold a range. Two, it's about to finally start that correction in two waves. I am after sells. We have this trend line and we have the new trend line. As long as they both hold, only for sells. Until where? Until these two waves actually reach the 38.2. That's around 1250, 1255. So for me, it's only for sell opportunities. If we can get closer to here, this should be good sell opportunity. And that's what I would want to trade. Let's talk about where is that? The oil, which starts to be also very interesting. And here we go. Oil also start its correction, very likely, to the downside. We have been expecting that. We have been talking about that. And the first leg actually already started the movement right here, right? And we can say that we are very likely into something like that. So if we can get closer to this area, look for sells. As long as we don't have a close above this place, look for short for two waves down. This was expansion that took the oil even more than 161.8. So the next thing would be very likely to the 61.8, which was actually retested already right here. So that should be to 100, which is 45.40, or even lower to 43.80. That could be a monster opportunity as well. And about the indices, they also started very nice move down. That's the S&P, and it's trying, according to the 4-hour chart, to break and hold below this trend line. We can summarize and say, as long as the last high does hold, there is pretty good chance sales are about to take place right now, and we are now fighting the 61.8 with the divergence, and that could be not bad opportunity to look for sales. So this is a trend line. If we can get closer to that, look for sales, but don't just jump in. Let it do the correction like this and then look for sales. This will minimize your risk, maximize your potential profit, and that's what we want. And according to the last double movement, double cycle on the daily chart, we are after 2040 zone. That could be a really good target for this. And same for every index, okay? If the down move is about to start, it's about to start now. Now the thing is here, what will happen with the non-farm payrolls? That's very likely what will decide if the Fed actually will be able to take the rates up as they hint on last Friday or not. That would be all for this week, friends. Don't forget the non-farm payrolls. Don't forget the tips I gave you for the dollar exposure. You do not want to find yourself with overexposure. That could end up great. That could end up terrible. And I don't want you to make mistakes. So don't try to be a hero and make a hero calls, or go and just show off of your friends, ooh, how good my call was. No, that's not the idea. We are traders, not analysts and not gamblers, not anything like that. Our goal, to make money. That's all. That's all what we are here for, to make money from our trades. Remember that. Very, very, very important. No one cares how many times you are right or wrong. What talks is the bottom line. You make money, you make pips, or not. That's all. Thanks for your time watching this video, guys. I wish you a wonderful week. Very good to be back, and I'll see you soon again. Thanks for your time. Yours, Vladimir Ribakov.